Good morning. It is Thursday, 30th May 2024, and I am Vijay here to detail out the pre market commentary. And today's topic is titled as Tug of War. The reason why I've titled it as Tug of War is in the last few days, you had only the optimists who were thinking that the markets will go up after the election, but there were also what we could call realists who would think that the numbers which people were talking about may not come through. So there was constant selling at higher levels. We had expected that if the market crosses particular Lakshman Rekha, then and closes above that, and then it would be a strong market, which did not happen in the last 2 days. So yesterday there was a sell-off in the Indian markets, and you had Nifty down by about close to 200 points, and the Bank Nifty down by about close to around 650 points. Now this probably was a surprise to a lot of people who are building positions based on the analysis of most brokerages. Yesterday, for instance, I think it was Nomura who did a study among 150 people, and 99.9% of them expected that the market will go up because BJP will get 310 plus. Some talked of 330, some talked of 350. There was nobody who was talking about below 303. Now, not only that, big brokerage houses have come up with results of their surveys which talk of similar numbers. So the market is primed with positions talking about clear win, and therefore market going up after June 4th, and therefore leverage is the highest. Now, in this backdrop, you are seeing FIS continue to sell. Yesterday, for instance, they sold about 5,840 crores, and DIS bought about 5,200. Now, DIS have been continuously buying against the FIS selling. So now, who is the smarter of them? One would have thought that DIS buying at these levels are because some system authorities have told them to support the market. Now, so therefore, they are not the smart money. The smart money is the FIIs. Now, it has been proven many times that FIIs are not the smart money. In fact, FIIs have covered their shorts and have gone long in the F&O. In the cash market, they're selling. Now, an interesting thing which I found out yesterday was that while in the cash market, DIs have been continuously buying, they have been building huge short positions in stock futures in the F&O, which nobody seems to have noticed. So basically, what the DIs have done is they've completely hedged their positions. So if you think DIs are not smart, I think time will tell that they are the smarter of the two. Now, the FIs covered all their shorts at the highest levels in the F&O, and now they've gone long. Now, subsequently, the markets have fallen. So next few days, you will come to know who is the smarter of the two. So there is a tug of war going on, and I believe that the smart money will win this time also. So that is as far as the as far as the DII and FI positioning is concerned. Now, retail is heavily long in the F&O. They are also long in the cash market through micro caps, mid caps, and small caps, which are not there in the F&O. So therefore, you have retail long in the cash market, you have FIs long in the F&O market, and the DIS have completely hedged. This is a very unique situation I have not seen for a very, very long time. So it is very important for us to be very, very careful in what we do in the next 4 days, at least next 3 trading days: Thursday, Friday, and Monday. And the fourth is, of course, the day of the results. Today is also the monthly settlement. Yesterday was the monthly settlement of Bank Nifty, and one would have expected some short covering. On the other hand, there was selling. So today also one may expect short covering, but who knows if it is just like yesterday, what happened in the Bank Nifty monthly settlement, we may see some selling also. So I would not really go headlong into the market thinking that market has fallen enough, so market will rebound. Now, if you look at where are the supports for the market, 47,900 on the Bank Nifty is a good support, and 22,600 is a good support on the Nifty. So 47,900 on the Bank Nifty, and 22,600 on the Nifty. 22,600 is 100 points below where we are. 47,900 is about 500 points where we closed yesterday. The Gift Nifty is talking about it opening around 22,650, which is an 80-point drop. Many times Gift Nifty is not a true indicator, so I would not place too much emphasis on Gift Nifty. In fact, I don't talk about Gift Nifty too often. But anyway, I just wanted for context, where are we? So 22,600 Nifty, 47,900 on a closing basis will make the market weak. The market will be strong if it closes above yesterday's highs in both cases. So that is still some distance away. So let us not worry about it right now. Now, what happened to the US markets, for instance? US Dow Jones has been the weakest of the three indices. People may not realize that Dow Jones has lost about 1,400 points from the highs. 1,400 points. It touched 40,000 and odd. Today is trading at 38,440. That is about 1,600 points actually. So nobody has noticed that a drop of 1,600 points is there. Why? Because Nasdaq has been strong. It made an all-time high very recently. Yesterday it succumbed, though Nvidia was very strong. Nvidia is alone the only stock which is holding up S&P and Nasdaq. Now that is the most dangerous thing to visualize, because previously people talked of 493 stocks of S&P down. Only 7 stocks are taking up the market. That is in S&P out of the 500. And now you realize that even in Nasdaq and S&P, there is only one stock which is holding up the market. How long it will hold when it's highly overvalued and where their financials are questionable is just a matter of conjecture. So one has to be very careful. Finally, the European markets also joined in the downward drift. DAX was down 200. CAC was about down by about 1.5%. Now, US 10-year yields suddenly shot up because the bond auction failed there. And 30-year yield also shot up. Now, that is something worrying. What about Japan? Japan is where the problem will start, is what I've been mentioning long time. And Japan, if you see, the Nikkei is down about today, down about 600 points. And Hang Seng is down about 200 points. Not that Nikkei down by 600 points means anything, but if you take it in combination with the Japanese 10-year yield, which has crossed 1%, and it is now trading at around 1.06 to 1.08. 1% yield for a 10-year, 1% for a 10-year yield looks very small when compared to what's happening in the US. But remember, for a very long time, Japan had negative yields on the 10-year. This 10-year yield, if you look at it in context, the last time it crossed 1 was in 2011. So 13 years back, the 10-year yield was above where we are. So that is something which is very concerning. Now, I may sound like a pessimist, but it is better to warn of a storm rather than to say there will be no storm, you'll only see rainbows. Because of the past experience, I am seeing storms all over. Forget about what is happening in Rafah and Israel and Egypt. That is another matter. We will not even go there. But just looking at the numbers are saying that the smart money is getting out, whereas the expectant money, or the bullish masses are jumping in and buying at every decline. So that is one thing you need to keep in mind. So yesterday, one of our favorite stocks, Campus Footwear, took off by 15%. I think Campus Software, as per my analysis, has turned around. Bata came with results, not great, but I think Bata probably has bottomed out. So that is one more stock I look at from the long side. Apart from that, I always am favorable to the liquor stock, though I'm a teetotaler, McDowell, and this Sun TV. These are the 4 or 5 stocks, and Biocon, of course. Biocon has come out of its ban in the NSE. So I think we should see now movements which are not constrained by artificial bans put by the NSE. So these are the 4 or 5 stocks. Tata Steel came with results yesterday. They were not good. So that may affect the sector itself. I think SAIL is vulnerable. Public sector enterprise are vulnerable. Select banking stocks are vulnerable. Maybe HDFC Bank and Reliance may hold the fort today. So there are some stocks which may hold the fort today. It is not that everything is gloomy, but you have to pick and choose very carefully. I will do as a trader both long and short today, and we will pick and choose, and maybe even take deliveries of certain shares. Silver and gold have sold off from their highs. Gold is much more weaker than silver. It is actually not weaker in that sense. but it is going in a steady up sideways move. So that's all for now. May you make money today. Thank you very much.